Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this particular video of derivative and hedge accounting part 2. Yeah, this is in continuation of part 1. If you have not seen, please go through part 1 first. In this video, I'll be covering in detail about introduction to the hedge transaction and many other topics, including the instrument that do not qualify for hedge accounting and embedded derivative. So let's dive into to complete derivative and hedge accounting with this part 2. Hedge transaction, which is 4.4.2 hedge transaction, right? So here we'll be understanding why we do like hedging. Any idea why we do hedging? What is hedging is all about?
सर जो हमारा बेसिकली रिस्क हो गया, एक्सपोजर हो गया टुवर्ड्स द किसी भी ट्रांजैक्शन में उसको रिड्यूस करने के लिए वी एंटर इनटू हेजिंग सो दैट वी कैन मिनिमाइज ऑन आवर लॉसेस.
बेसिकली सर पर्टिकुलर सेफ साइड रहने के लिए वी आर फॉर हेजिंग.
We are fixing our monetary liabilities जो भी हो.
Yeah, losses kind of thing. Yeah. Yeah, you're right. So hedging is basically to mitigate the risk of losses, right? And there are certain options or there are certain contract through which you can mitigate the risk, right? So each hedge transaction need to be valued at fair value, and hedge can be the fair value hedge, cash flow hedge, or the foreign currency hedge, right? So we'll be discussing one by one in detail. Cash flow hedge, if you remember the example before the break, we have discussed about the external commercial borrowing, right? So every month you need to pay certain EMI, and that EMI is a cash outflow, right? Isn't it? Yes or no?
Yes, sir.
All the EMI is your cash outflow. At each cash outflow, there is a risk of foreign currency change, or there is a risk of change in interest rate, right? So that may result into impact or result into change in cash outflow, right? How to mitigate that risk? It's called cash flow hedge, and the accounting a result or accounting impact of the same, how you need to account for, is called cash flow hedge accounting. Second is foreign currency exposure. So foreign currency exposure, if you remember, we have discussed few examples for the foreign currency exposure also. Like here we discuss buy option, call options, where we are agreeing like this much amount of money we'll be paying. Same way this watch example we have discussed. Here also we are fixing the foreign currency exposure, right? When you are fixing the foreign currency exposure, you are limiting the loss or you are limiting the fluctuation. That is called foreign currency exposure hedge, right? And that also result into certain amount which is like your expenses or which is your hedging transaction cost. So how you account for those hedging transaction cost and expenses, that we will be understanding in the hedge of foreign currency exposure. Any other kind of hedge would come into the fair value hedge, and all the fair value hedge we always report the impact of the same in income statement. Income statement means your profit and loss account, right? Whereas cash flow hedge, it can go to other comprehensive income until it is realized. But once it is realized, it will go to the income statement. And foreign currency exposure hedge is also go to the other comprehensive income until it realized. But once it is realized, it will be transferred to the income statement. So one by one we are understanding. So I have put everything in a table, and each table, if you see, the points are very much similar, but how to do the treatment under the different category of hedging. So that in a one go, you can look at all the three category of hedge and what are the similarity and what are the dissimilarity among the three category of hedging options, so that you can see in a one table. So it will help you in your exam time to make your life easy, so that you can look at everything in a very first go. Sorry. So first one, let's understand the fair value hedge. Fair value hedge. What is hedge? We discussed hedge is to manage the exposure of change in fair value. Change in fair value, that means today the gold rate is, let's assume, $800 per 10 gram. And after 90 days, it may go to 850 or it may come down to 750, right? So the fair value of the gold might be changing with the change in time. But if you want to purchase or if you want to sell at a particular price on the particular time and the particular date, then if you want to mitigate the risk, if you want to fix your risk of fluctuation in the gold rate, then you buy an option, right? And you buy an option. With that you fix the forex, with that you fix the value of that particular item. So that is called hedge. So hedge is to manage the exposure of change in fair value. When you are making the hedge, when you are entering into any swap, when you are entering into any option, when you are entering into future contract or forward contract, to manage the fair value risk, that is called fair value hedge. Make sense?
Yes, sir.
So for
Yes,
example,
sir.
if you have 100 gram gold, right, and you entered into an agreement with any customer, he or she will buy 100 gram loan at the fair value after 90 days. So in that case of scenario, after 90 days, neither you are aware of what is the fair value or nor the customer is aware of. But if you want to mitigate that risk, then you go to the bank and hedge the transaction, right? The transaction hedging for the fair value is called fair value hedge, right? Fair value hedge protect the change in value caused by fixed term rate or prices. Recognize all the gain or losses due to change in fair value of hedge in income statements. So this keep is as a thumb rule. Keep in your mind as a thumb rule for all the fair value hedge. Whatever the gain and loss will always go to the income statement. Will always go to the income statement. It will never go to the other comprehensive income. So fair value hedge, just a thumb rule. All the gain and loss always go into the
Income statement.
income statement, right, Kashish?
Yes, sir.
If no fair value hedge, then change in fair value will be recognized in other comprehensive income, and once it is realized, it will release to income statement. For a hedge to quality as fair value hedge, following important criteria must be met.
So that would be qualified.
For a hedge to qualify,
As a fair value hedge. I think qualifiable.
For a hedge to qualify as fair value hedge, following important criteria must be met. First one is formal documentation is required. Formal documentation of the hedging transaction. If you are entering into a hedging transaction with bank, then what is the underlying asset? What is the current value? What is the future value? Right? Respective documentation of that. What kind of arrangement you have with the customer? What kind of arrangement you are making with the bank? What is the rate agreed between you and the bank? So all things need to be formally documented of the all hedging relationship of entity, management objective and strategy for undertaking the hedge. So you need to make sure everything is properly documented to consider any transaction to be to qualify as a fair value hedge. Second thing is hedging relationship is expected to be highly effective throughout the hedge period. It should not be like, what is like hedging relationship? That means the gold, for example, like we were discussing, 100 grams of gold, right? Which you are planning to sell after 90 days. And for that you enter into a hedge transaction. It should not be that you have sold the gold in between the 90 days, right? That relationship between the hedging and the actual underlying asset or liability must be maintained. Make sense?
Yes, sir.
It should not be like you have given that gold already to third party, you have sold it, or you might have pledged it to the bank for and taken certain loan, right? So that should not happen. Third is entity may assess effectiveness qualitatively unless the fact and circumstances change. Qualitative assessment must be documented quarterly. So the party need to assess the effectiveness of hedging quarterly. If it is for less than 90 days, then it's not required. But if the hedging is more than 90 days, then every quarter you need to re-verify the change in hedging transaction if there is any, and ensure the documentation. Any doubt here?
No, sir.
Kashish,
No,
Santrupti?
sir. Clear, sir.
Same way, how you guys do quarterly review of financial statement, right? When you do quarterly review, at every quarter, whatever the open items for hedging, so you re-verify the documentation. If there is any change required in hedging, then you need to make those accounting changes, right? The same thing applies here also. Fourth point is the hedge item is specifically identified as either all or a specific portion of a recognized asset or liability. Hedge item can also be a portfolio of similar assets or liability. So hedge item, it can be an individual item or it can be the portfolio of the item. Portfolio of item means, for example, you hedge all your inventory, if you hedge all your account receivable, if you hedge all your investment, right? So there are various categories of investment, there are various categories of loans, there are various categories of inventory, right, that you can do hedging. So it can be like one particular item or it can be the portfolio of the item. Fifth one is the hedge item represent an exposure to change in fair value attributable to hedge risk that could affect the reported earning. So if all these 5 conditions exist, then that particular hedge transaction is called fair value hedge. Hedge accounting of fair value hedge will not continue when this particular transaction would not qualify for fair value hedge, basically. In short, if I say, if above criteria did not meet any of the 5 criteria which we have discussed. Second is derivative expire, sold, terminated, or already exercised. So if the derivative which you are considering for the fair value hedge is already sold, already expired, already terminated, already exercised, then it is done, right? Then it will not come under the fair value hedge because actual transaction has already took place. Third one is an entity remove the designation of the fair value hedge. That means you jumped out of the fair value hedge transaction. So then also that particular item would not consider as a fair value hedge. Gain or loss on fair value hedge always pass through income statement. That's a thumb rule, right? Any doubt what is fair value hedge?
सर डाउट था सर हम hedge तो सर तभी करेंगे ना when we are uncertain about the future losses के तो सर हम जब जब वो करेंगे तो सर मतलब हम hedge ही क्यों कर रहे हैं सर अगर हमें मतलब अगर profit होगा तो then we are not going to hedge.
Yeah, when you are expecting the risk, then only you do hedging. When you are not expecting the risk, you will not do hedge. If you are doing hedge, it can be a fair value hedge. That means the change in the fair value of asset or liability that you are hedging. Or in future, the cash inflow or cash outflow may change. That is called a cash flow hedge, right? Third one is there may be a change in currency rate. So that is called foreign currency exposure hedge. So there are 3 categories of hedge. One is the value of the asset or liability can change. That is called fair value hedge. Second is the cash inflow or outflow can change. That is called cash flow hedge. Third is the foreign currency exchange rate may change. That is called foreign currency exposure hedge.
Got it, sir. Got it.
So first, so far we have discussed fair value hedge. That means value of the asset or liability may change, right? And you are managing through hedging that so that the value will fix for you.
और ये सारे के सारे components, sir, it will maintain in the income statement.
For all, fair value hedge always result into income statement. That means if there is a gold and you are expecting like in future the price will change and you are hedging it, right? Whatever the income or loss or gain or expenses, gain or losses you have resulted because of that fair value hedge will always go to the income statement. But when it comes to cash flow statement, will be cash flow hedge, we'll be discussing what all item will go to the other comprehensive income and what all item will go to the income statement, and how other comprehensive income will release to income statement later on.
Okay. Got
That
it.
we will be discussing now. As of now, we have completed fair value hedge. Right,
Correct.
Santrupti?
Yes, sir.
Ayush, good?
Yes, sir. Good.
Okay. So now coming to the second point, which is cash flow hedge. Like we discussed the example of external commercial borrowing. In the external commercial borrowing, so you have cash outflow every month of how much? $20,000. Right? And that will fluctuate because you have end up paying in Indian currency. So your cash outflow sometimes is more, sometimes is less. Right? So how to mitigate that risk is called cash flow hedge. So hedge of variable cash flow of recognized assets or liability, or where costed transaction, or there is some typo error, or at fair value of transaction, or at fair value of transaction. So cash flow hedge protect against the risk caused by variable price, cost, rate, or terms. For example, like if you remember yesterday, we were discussing an example of petroleum product. So in the international market, the petroleum product like crude oil price is fluctuate every second, right? You entered into an agreement with, let's say, a Russian company to purchase 10 barrel of crude oil every day for next 12 months at the international price in the specific market. Right? In that case of scenario, like pricing for crude oil will fluctuate every second. As and when you are purchasing at that point of time, whatever is the rate applicable in that market, international market, that rate is being applicable to you. Right? So your cash flow is not fixed. It depends on, like today, if it is $38 per barrel, tomorrow it can go 40, or day after tomorrow it can go to 38, or day after tomorrow it can go to 60, or maybe like after that it can go to 35 or 36, right? So every day it is changing, but you're buying the same quality of product. So you would love to fix it so that you know like what will be your month-on-month cash flow would be, or day-by-day cash flow would be. Right? For that, if you see the second paragraph, cash flow hedge protect against the risk caused by variable pricing. Right? That is variable pricing, cost, rate, or the terms that cause future cash flow to be uncertain. So cash flow hedge helps you protecting the risk of future cash outflows. Example like external commercial borrowing at particular rate of interest plus LIBOR, interest rate for which installment in foreign currency payable in future hedge with fixed rate of interest, right? You are swiping X plus LIBOR to the fixed rate. One second. Right? Same way like the price we discussed about petroleum product. So any gain or loss which is resulting from change in fair value of cash flow hedge is recognized in other comprehensive income. So this is the difference between fair value hedge and cash flow hedge. So any cash flow hedge would first go to the other comprehensive income. Why it will go to the other comprehensive income? You know why something we park in other comprehensive income? I think we discussed in earlier class.
Because it is still not realized.
Yes. And the major thing is we park those items in other comprehensive income on which company management do not have direct control. Right? If there is a change in petroleum price and that has resulted into change in cash flow, so why it should hit my income statement? Right? I'm not responsible for it, but the economic environment is being responsible for it. Make sense? That was the logic of making other comprehensive income. You know, like the companies who are dealing in multiple countries, because of maybe some country do have hyperinflationary environment, some country may have like different economic environment, right? Because of that economic environment or different inflations or deflations, the main companies financial statement were impacting. So what in the IFRS and US GAAP, they come up with an idea to park those items on which management do not have direct control into the other comprehensive income unless and until it will get actually realized. Same way here also, like today you enter into an agreement that you will be purchasing 10 barrel crude oil every day from a Russian company at, let's say, $50 per barrel. So now in the market, whatever the price may be fluctuating will not impact your deal. Yes, no.
Yes.
But there may be possibility that someday you'll be losing and someday you'll be gaining.
Correct.
Right? So the loss or gain which is resulting because of this transaction will be passing on to the other comprehensive income because you have already made the deal, you have already committed to it. Right? As and when you start purchasing it, like materialists start coming to your production house, then it will consider as a realized gain or loss. And once it is realized gain or loss, then that particular amount will go to the income statement, will release from other comprehensive income and go to the income statement. But at beginning, it will all go and sit into the other comprehensive income. Make sense?
Yes.
Upon realization, that is actual receipt or payment of the amount are reclassified from other comprehensive income to income statement.
सर एक कंफ्यूजन है, ये जो ECB होता है हमारा एक्सटर्नल कमर्शियल बोरोइंग, इसमें जो हमारी पेमेंट हो रही है वो सारी INR में हो रही है, तो उस केस में हमारा रिस्क कहाँ पे हो रहा है? मतलब
फिर INR is changing, ना?
मतलब मेरे पास तो अच्छा द रेट ही चेंज हो गया ना, वो तो फिर इंटरेस्ट
that comes in third category.
राइट. ओके.
Foreign currency exposure.
ओके.
Next is for hedge to be a quality, to be a quality. I think it's a quality, not qualify. So here we change.
For hedge to, ये सर वो है ना कि for hedge to qualify as a cash flow
Not
hedge.
qualify. For a hedge to a quality as a cash flow hedge.
नहीं सर,
This is what written in like ESC quality.
होगा. मुझे तो ये लगा ना जैसे हर जगह हम लिखते हैं कि it has qualified to become this, तो मुझे लगता है कि वही हो गया कि for hedge to कि
but the terminology in accounting standard is used is called quality.
ओके ठीक है ओके तो फिर वो अभी वही होगा फिर मैं भी मुझे तो वही लगता है
The hedge to a quality as a cash flow hedge, certain criteria must be met. So first one is the same, like documentation, right? Again, for any you can say hedge transaction to be qualified either as a cash flow hedge or maybe fair value hedge or maybe like currency hedge, the first and foremost important thing is the proper formal documentation. Documentation of the underlying asset, documentation of the transaction, documentation for the pricing, documentation for the quantity, and documentation of the relationship of the hedge with the underlying asset. That need to be maintained appropriately. Second thing is hedging relationship is expected to be highly effective throughout the period, right? Same. You should not sell the underlying asset, right? It should be intact throughout the period. Third is entity may assess the effectiveness of the quality unless the fact and circumstances change, and the quality assessment must be documented quarterly. Same, 100% same. Fourth one is forecast the transaction. First one is whether it's probable, which is like more than 50% chance. Second is specifically identify as a single transaction or group of individual transaction. Third is transaction with a party external to the reporting entity and present exposure to the various cash flow for the hedging risk that could affect the reporting earning. And the last one is it does not include acquisition of an asset, incurring of liability that subsequently be measured with change in fair value attributable to the hedge risk reported currently in the income statement. So these four, you can say, things to be met to consider any item to be a cash flow hedge. Most important thing you need to keep in mind is the formal documentation, relationship, assessing the quarterly effectiveness, and then forecasting the transaction. So if those four things are being properly there, then that particular item, that particular hedge can be considered as a cash flow hedge. So hedge accounting for cash flow hedge will not continue if above criteria do not meet or derivative expire, sold, terminated, same. Entity remove the designation of the cash flow hedge. So any of such things happen, then that particular cash flow hedge would not be considered as a cash flow hedge. And gain and loss on cash flow hedge, first consider in OCI. This is a thumb rule. And upon realization, it transfer to income statement. If any portion of transaction is not hedged, so there may be possible that partially you will be hedging and partially you are not hedging. So let's say you have taken an external commercial borrowing for $1 million, right? And your EMI is $20,000. And you said, I would like to hedge the principal repayment, but not the interest repayment. Are you getting my point?
Yes.
Right? That means you are doing a partial hedge. Right? If any portion of the transaction is not hedged, then, for example, for interest, you're not hedging. So whatever the gain or loss is coming out of the interest cost will directly go to the income statement, will not go to the OCI. Make sense?
Yeah, right.
Yes,
Kashish?
सर एक बार थोड़ा ऊपर करना इसमें थोड़ा सा और ऊपर सर इसमें लिखा था कि मतलब ऊपर ही है सर थोड़ा कि फेयर मार्केट वैल्यू में अगर हम चेंज नहीं करेंगे अगर नहीं होता तो इट विल बी कंसीडर्ड इनटू ओसीआई वो कि यहाँ पे था फेयर मार्केट वैल्यू वाले में ऊपर ऑप्शन में और ये रहा सर इफ नो फेयर वैल्यू hedge then change in fair value will be recognized in OCI. तो सर ये इनकम स्टेटमेंट में नहीं होगा.
On this one you are saying?
No sir, ये first one. If no fair value hedge.
This you are saying. If it is not a fair value hedge, then change in fair value will be recognized in other comprehensive income. So two different things. First, whether that particular item is covered under the fair value hedge or not.
Okay.
If it is not covered under the fair value hedge, right, then it will go to the other comprehensive income. But if it is covered under the fair value hedge, it meets the criteria like these 1, 2, 3, 4, 5. If it meets these 5 criteria, then it would consider as a fair value hedge.
Or the profit or loss over, then it will go into income.
Yeah, it will go to the income statement. If the fair value, if the asset or liability does not meet fair value hedge criteria, then profit or loss or gain or loss will go to the other comprehensive income first.
Got it, sir. Got it.
Now coming to the third part. Hedges of foreign currency exposure of net investment. This is majorly foreign currency hedge. That means like same like if we continue with this ECB example, here the foreign currency hedge is being required because the currency rate is fluctuating, right? So this currency rate is fluctuating, which you want to fix it. So for this, you want to enter into a foreign currency exchange hedge. So here you fix this currency swipe that you'll be paying 16,50,000 month over month. Rather, and in exchange of that, you'll be getting $20,000 from the bank. Right? So here you fix your exposure. Your exposure is 16,50,000 month over month, and the bank will give you $20,000 to repay your loan and interest. That is called foreign currency exposure hedge. Special accounting for hedge apply only to the extent that hedging instrument is highly effective. So this accounting treatment, foreign currency exposure hedge accounting, will applicable only when it is a highly effective hedge. If it is not a highly effective hedge, then this accounting will not applicable. Second is hedge of foreign currency exposure protect against the risk caused by change in FX rate. What is FX rate?
The foreign exchange rate.
Foreign exchange rate.
Yes. So that may be for purchase, sale, operation in foreign country. So for example, if you are a US based company, let's say you are Amazon and you have operation in India, Amazon India, right? For you, there are a lot of purchase and sale transaction which is happening every second in Amazon India, right? So there are so many currency exposure to you, right? To mitigate that currency exposure, you take like hedging, and for that you maintain effective hedging transaction. Hedge of foreign currency exposure for net investment mainly refer to translation exposure of foreign entity to group company. So for example, like you are Amazon USA and you set up a company Amazon India, right? And when you set up a company in Amazon India, you might have made certain investment for fixed assets, property, plant, equipment, right? And then manpower, you have invested some certain thing, and then the operation might have started. And after 2 years, you have your balance sheet of Amazon India. Now you need to consolidate that balance sheet or financial statement of India to the financial statement of US company, right? This is what we do in consolidation.
Yes, sir.
Right? And then there would be like translation of the currency from INR to USD. Right? So when you are making consolidated financial statement in US dollar, then the foreign subsidiary financial statement need to be converted into the US dollar for the consolidation purpose. Yes or no?
Yes, sir.
Right?
Yes, sir.
And to those translation, you have consider like hedging. For example, when I was doing like audit of Indorama Nigeria back in 2015, so the parent company have their financial statement in US dollar, Indorama US. They have made like investment and set up like Indorama Nigeria. And now Indorama Nigeria was making their financial statement in Naira, which is the local currency. But Naira was depleting like anything because of the hyperinflationary economic environment in Nigeria. So when I started auditing, so it was like around 298 Naira per dollar. But when actually we reached too close to the financial year end, it has gone to 448 Naira per dollar. Can you imagine like how hyperinflationary economic environment was there? Right. If at that point of time you have invested, let's say $1 million. When you have invested $1 million, multiply by 298, that means 2.98 billion naira, right? But the value of the 2.98 billion naira has gone down to 150 billion naira because of the depletion in the currency. Make sense?
Yes, sir.
So it is a very risky situation for the parent company. Now that $1 million which they have invested has actual value become just $600,000.
Correct.
40% has gone down because of depletion. In that case of scenario, what that company should do?
It should record.
They will do foreign currency hedging.
Right.
Exposure hedging, right? So when you are translating, then you will be hedging it, and accordingly you will do the translation of financial statement in the US currency. So that is called foreign currency exposure hedge or translation.
But sir, इसमें hedge कर रहे हैं तो इसमें hedging कैसे हो रही है? मतलब कि
so no, that's a very good and practical point. Here we are hedging like I have invested $1 million, right, in that company, and then I go to the investment banker. Okay. And I say like, this is $1 million. I have made an investment and I wanted to intact this amount as an investment, right? So then looking at the future economic changes, the investment banker will say, we can intact at $800,000 after a year. Okay. Right? So that's way it can be intact. Or the other way could be like what we have done. We have changed the functional currency. Okay. Okay. And do you know what is functional currency?
Functional currency is the currency in which the current company is actually operating.
Yes. Majority of their transaction take place in the particular currency. So then we started taking all, you can say purchases, salary, sales, and everything in US dollar. So we started, we have converted our functional currency from Naira to US dollar.
So जब सर बैंक के साथ हमारा डील जो हुआ उसमें 1 ईयर के बाद जो मैंने प्राइस डिसाइड किया कि मेरी वैल्यू ऑफ इन्वेस्टमेंट इतनी है और इतने पे मैं आपसे एग्री कर रहा हूँ, तो जो डिफरेंस है that would be paid by the bank?
No.
No.
That is your risk. But to consider that $800 instead of $600 is your protecting your risk.
नहीं सर, मेरे को क्लियर नहीं हुआ ये कि मतलब मैंने इन्वेस्टमेंट करा सपोज 100 रुपीज का, सपोज अब मेरी उस 100 रुपीज की वैल्यू जो है मेरी सब्सिडरी में जो कि इंडिया में है नाइजीरियन, ठीक है, उसकी वैल्यू 100 की 50 रह गई। मैंने बैंक के साथ डील किया था कि 1 साल बाद जब मेरा कोई सरकमस्टांस आएगा और जो उसकी वैल्यू है वो कम हो जाएगी, ठीक है, तो मैं उस ट्रांजैक्शन को उसी पे रिकॉर्ड करूंगा जिसपे मेरी पहले थी 100 रुपए शायद। यही होगा ना?
No. So here also like it's an open platform. Same way like in the morning we were discussing like the banking example for swap of loan. Okay. Same way like the investment swap also do happen, right? There, like for example, you are Ayush Jain and you wanted to invest in a, let's say you purchase 50% share of a Nigeria company in US dollar and you invested $1 million, right? At the same time, you that investment will be made through like investment banker, or maybe like in a stock exchange, or maybe through any other like registered agent mode, right? At the same time, you put that into the market that after a year I wanted to sell it off at $800,000, and somebody else is being interested in purchasing, right? Then this transaction do happen.
Okay, so I can sell that 1 million transaction which I had invested in that company 1 year before.
So you buy an option. You buy an option to sell.
Option to sell हो गया 800,000.
Yes. And if that point of time, if market is below 800, then you will sell it. If it is above 800, then you will not sell it.
Okay, got it. Right.
Hedge of foreign currency exposure of net investment, mainly referred to as translation exposure in foreign entity to the group company. Similar to cash flow hedge. Hedge of foreign currency exposure of net investment. First considering other comprehensive income, and upon realization of gain and loss, it transfer to income statement. So cash flow hedge and foreign currency exposure hedge go hand in hand in same way in terms of accounting treatment. So after initial quantitative test of hedge effectiveness, an entity may assess the effectiveness of the qualitative unless the facts and circumstances change, and every quarter you need to do the documentation of the same, right? So this is more about like 3 category of hedging transaction. What are the 3 category of hedging transaction? Fair value hedge, cash flow hedge, foreign currency exposure hedge. What is fair value hedge? Fair value hedge is based on the change in the value of asset and liability, underlying asset and liability. Cash flow hedge is on account of change in cash inflow or cash outflow in future. Foreign currency hedge is in future change in the foreign currency rate. So this is a thumb rule you keep in mind. Then it will be easy to bifurcate.
Okay.
Right? Kashish, Santrupti?
Yes, sir.
Yes, sir.
Okay. So now let's do a question. 2 questions. How should the US publicly traded company report a change in fair value of a hedge available for sale security attributable to the foreign exchange risk if the hedge is a fair value hedge? First, as a contra asset related to hedge. Second is in earning. Third is in OCI. Fourth is a change in the cost basis of hedge.
Sir, in earnings.
Santrupti, Ashish?
सर अर्निंग्स में ही होगा. अगर सर कुछ उसमें hedge ना होता, then we will take it into other comprehensive income.
Right, absolutely right. Next one is Nexon company has 2 derivatives related to 2 different financial instruments, instrument A and instrument B, both of which are debt instruments. So they have 2 debt instruments, instrument A and instrument B. The derivative related to instrument A is a fair value hedge, and derivative related to instrument B is a cash flow hedge. So A is fair value hedge, that means underlying asset you are hedging. B is cash flow hedge, that means future cash inflow and outflow you are hedging. Nexon experienced gain in the value of instrument A and B due to change in interest rate. Which gain should be reported in the Nexon in its income statement? So they have 2 derivative and they both are debt derivative. One is the fair value hedge, the second one is cash flow hedge. In both, he has certain gain. So he's asking which gain need to be reported in the income statement. Neither gain in value of debt of instrument A or B, gain in the value of debt instrument B, gain in the value of debt instrument A and B, and gain in the both. So which one need to be reported in income statement? Have you understand what is the call of the question?
Question तो सर आ गया समझ.
What is the call of the question?
So
There are
like
2 instruments. there are two instruments, instrument A and instrument B. Instrument A is a fair value hedge and instrument B is cash flow hedge. So, and both the instrument, they have gain. So which gain need to be reported into the income statement? It's very simple question. Ayush, Santupti.
सर जो फेयर वैल्यू हेज है, फेयर वैल्यू इज डेरिवेटिव, एक सेकंड, डेरिवेटिव रिलेटेड टू इंस्ट्रूमेंट,
पर दोनों में ए ही होगा।
ए में जो है वो तो गेन वैल्यू, सो व्हिच गेन शुड बी, तो सर फेयर वैल्यू हेज जो है वो तो इनकम स्टेटमेंट में जाएगा, तो वो इंस्ट्रूमेंट ए का हो गया।
हाँ,
करेक्ट।
और सेकंड वाले का सर
बी है, दैट इज अ कैश फ्लो हेज, वो हमारा
सर ओसीआई में जाएगा, फिर इनकम स्टेटमेंट में जाएगा,
फिर इनकम स्टेटमेंट में जाता है, राइट।
So what is the all of the question?
So which gain should be reported in income statement? So it should be answer 2.
Answer
2, option 2,
right, Santupti?
सर अगर इनकम स्टेटमेंट और अगर यहाँ पर ये बोलते कि इनकम स्टेटमेंट है और वो क्या बोलते हैं उसको कैश फ्लो स्टेटमेंट है, तो देन वी विल टेक इट एज बी ओनली बी।
Right, so everyone agree? So this is a fair value hedge, and fair value hedge is on instrument A, and fair value hedge will result into income statement. So hence the answer is second one.
क्योंकि सर अगर यहाँ पे इनकम स्टेटमेंट की जगह अदर कॉम्प्रिहेंसिव होता देन ओनली बी होता फिर वो।
Yes, yes, right. Now come to the last part, which is hedging disclosure. So disclosure, how and why an entity use derivative instrument, that you need to disclose. How they are being accounted for, fair value hedge, cash flow hedge, foreign currency exposure hedge, that you need to disclose. How they affect the entity financial position, so their impact is going to income statement or it is going to other comprehensive income, that you need to disclose. Objective of holding or issuing those instruments, why we have purchased those options and why we have sold those options, why we have released those options, those strategies you need to disclose, right? Separate description to distinguish between derivative instrument and non-derivative instrument need to be made, and designated as a fair value hedge, what all items are being considered as a fair value hedge, what all item to be considered as a cash flow hedge, what all item need to be considered as a foreign currency exposure, that need to be separately disclosed, and all other instrument and the present of the fair value or non-fair value. So these all are general disclosure required, but there are some specific disclosure also required. First, when you are using fair value hedge, what is fair value hedge? What is fair value hedge?
Other than
the change in value of asset or liability.
Yes, change in the value when there is an underlying asset or liability, and there is change in the value, fair value of that asset and liability would result into, would be considered for the fair value hedge, right? For that asset and liability, you need to disclose for derivative or non-derivative instrument that may give rise to the foreign currency transaction gain or loss, that have designated and qualified as a fair value hedge instrument. Second is gain or loss presented separately by type of contract and by income and expense line item. So what all gain, you need to, again, within the fair value hedge, there are certain fair value hedge on the asset, there are certain fair value hedge on liability. So you need to disclose asset separately, liability separately, and that result into certain gain or certain item may result into loss. So all the gain need to be disclosed separately, all the losses need to be disclosed separately. So total amount of each income and expense line item were hedge are recorded separately, amount excluded from the assessment of hedge effectiveness. So there are certain item which is not included in the hedge, or that is not an effective hedge, that is need to be bifurcated separately. Portion of gain or loss excluded from the assessment, that also you need to disclose separately. And when hedge firm commitment no longer qualified to be the fair value hedge, then that item need to be disclosed separately. Plus, additional tabular disclosure include the carrying amount of the asset or liability, which is considered for the fair value hedge, cumulative amount of the fair value hedge adjustment, line item in the balance sheet that include in the hedge assets and liability, remaining cumulative amount of the fair value adjustment of the discontinuing hedging assets, exclude the fair value hedge adjustment basis the related foreign exchange risk. So I know like this may sounds like a theory, but what we can do to make it interesting, go to 10K.
Okay.
Right, C value, fair value hedge. So here you see derivative designated as hedge. These kind of disclosure you need to make. Fair value hedge. In the fair value hedge, how much is interest rate swap, foreign currency swap, cash flow hedge, how much is on account of interest swap, foreign currency swap, and then contract, future contract.
ये सर जो notional amount डाली है इसमें, this notional amount is what we have underlying asset पे कितने पे agree
yes. Right, and then here you need to disclose the carrying amount, cumulative adjustment, which we were discussing, right? So these kind of disclosure you need to give into the financial statement for derivative and financial instrument. How much is foreign currency, commodity, PSA, warranty, derivative instrument, and then what is the hedging? Right, so this all, like here it looks like theoretically, but in the financial statement it will look like this.
Right.
Kashish, Antrupti.
Yes, sir.
Now, next one is cash flow hedge. Cash flow hedge, gain or loss recognized in other comprehensive income. So if you see in the cash flow hedge, so if you see in the cash flow hedge, let me take you to OCI.
Basically, foreign currency or interest rate can be cash flow or fair value hedge. है ना, मतलब का part हो गया.
So
यहाँ पे नीचे आ रहा होगा सर इसमें. तो defined benefit plans है, tax benefit, adjustment of tax. ये तो सर अदर कॉम.
one second. There is a consolidated statement of other comprehensive income. So here is a foreign currency translation adjustment, defined benefit, other comprehensive losses, net of tax. So we need to go to the note 20. So India, this is not. There you go. Note number 20. And this is for equity. Foreign currency translation adjustment. So this is like the part 3, foreign currency translation adjustment, which will go to the other comprehensive income. Let's see if there is any consolidated detail for
ये रहा सर.
1 second. Yeah. So here, if you go the equity derivative financial instrument, I think will come over here. Derivative financial instrument, foreign currency commodity, same thing which we were discussing. I think yeah.
उसमें वो सर एक डिस्क्लोजर भी बोला था ना, नॉट डेजिग्नेटेड एज हेजेस भी हमें डिस्क्लोज करना होता है, वो इसके ऊपर दे रखा है जस्ट एज.
Yes.
ये वाला भी हम पढ़ रहे थे अभी.
Yeah, not designated as
हेजेस.
right, Kashish? Santrupti?
Yes, sir.
So these kind of disclosure you need to make. Now coming to the cash flow. Gain or loss recognized in other comprehensive income because of cash flow hedge. Then how much you have realized and transferred to the income statement, right? Then third is gain or loss on account of excluded from hedge effectiveness. There may be possibility that certain amount will not result into hedging because that do not qualify for the effective hedge. So that will go to the income statement directly. Then maximum length of the time for which the hedge is being exposed, and the gain or loss reclassified into earning resulting from discontinuance of cash flow hedge. So that you need to disclose. And then third one is hedge of net investment in foreign operation. Disclose the adjustment in OCI and the amount reclassified to income statement, and then portion of gain or loss to amount excluded from the assessment of effectiveness. Last one is if there is any offsetting of derivative, purchase agreement and security lending transaction. Right? So these are like disclosure. Let's do two quick questions. The FASB ASC 815 require that an entity that hold or issues derivative instrument or non-derivative instrument that are designated and qualified as a hedging instrument disclose which of the following. What is the call of the question? As per FASB 815, the entity who hold or issue the derivative, what all disclosure they need to make. First one is its objective of holding or issuing those instruments. Second is its context need to be understood, those objective, its strategies for achieving the objective, or all of the answer correct. So what all things we have understood need to be disclosed. If you go back to the disclosure part,
sir.
Purpose क्या है? Why?
right? Disclose how and why entity is using the derivative, how they are accounted for, how they are affect the entity financial position, objective of holding and issuing, and strategies to achieve those objectives. Right?
Correct.
So it cover all the three.
Right.
Right? Kashish?
अरे ये हाउ दे इम्पैक्ट द फाइनेंशियल पोजीशन में इसलिए क्योंकि वो इनकम स्टेटमेंट में भी जाएगा और अदर इनकम कॉम्प्रिहेंसिव में भी जाएगा.
Yes, financial statement is entire financial statement. Financial statement includes 5 things: your balance sheet, your income statement, cash flow statement, statement of equity, and notes to accounts. So these 5 things combined together is called financial statement.
Yes, sir. Got it.
Next question: which item is required disclosure regarding fair value hedge? So which item required disclosure as a fair value hedge? So out of these 4, you need to select which one is the fair value hedge. First is the net amount of gain or loss included in the cumulative translation adjustment during the reporting period. So that is foreign currency exposure hedge, right? So that's incorrect answer. Second is the amount of net gain or loss recognized in earning when hedge firm commitment no longer qualify for the fair value hedge. Third is, just wait. Third is the estimated net amount of existing gain or loss at the reporting date that is expected to be reclassified into earning within next 12 months. So that goes for a cash flow hedge. That means currently you are parking in it, and in next 12 months when you are actually getting the cash, then you are transferring it to income statement. So third is incorrect. Fourth is a description of the transaction or other event that will result into reclassification into earning of gain and loss that are reported in accumulated other comprehensive income. That is also cash flow hedge. So the best right answer is second. Make sense?
Yes,
Yes,
sir.
sir. So cash flow में sir 12 months के अंदर हमें income statement में भेजना ही पड़ता है after doing.
No. So it's just like the example, or it is just you can say facts which is given to you that in next 12 months it will be transferring from cash flow to income statement or other comprehensive to income statement. So that give you indication that it is a cash flow hedge, not a fair value hedge.
Got it. Clear.
Okay, let's quickly do this other topic also really quick, just one page. So other topic, we have three things: instrument that do not qualify hedge accounting, embedded derivative, or hybrid financial instrument. Instrument that do not qualify hedge accounting, a firm commitment to acquire the business in a business combination cannot be hedge item except for the foreign currency risk, because of the other risk being hedged cannot be specifically identified and measured. So when you are doing any merger or acquisition, so at that point of time, so what will be the final result of the merger or acquisition? You cannot hedge that, but what best you can hedge is the foreign currency exposure. Second is embedded derivative. Embedded derivative, that means you have already certain derivative instrument in that, you already have certain instrument in that there is something embedded as a terms and condition which is resulting into that instrument as a derivative instrument. So derivative instrument would be your fair value, your cash flow, or your foreign currency exposure hedge, right? So it can be your option, it can be swap, it can be future, it can be forward contract. So there is possibility that you have normal agreement, but within that agreement there are certain terms and condition which is resulting into that agreement to be a derivative instrument. That is called embedded derivative. Embedded derivative is defined as a component of a hybrid contract that is also included a non-derivative host, with the effect that some of the cash flow of the combined instrument vary in a way similar to standalone derivative. For example, entity index note, convertible preference share. So preference share you have issued, it's an instrument, but in future they are convertible into the equity at certain rate. That is derivative, right? So maybe loan, you have taken a loan that is like convertible debenture. So in the debenture, like you have straightforward 10% interest, but in future at what price they will going to get convert into equity and what financial benefit that holder of the equity will be getting would decide on the later date. So that is a derivative embedded in it.
इसमें सर नॉन डेरिवेटिव होस्ट जो हुआ वो हो
So
गया
for example, you have taken a debenture at 10% interest rate for 5 years, and after 5 years it will be convertible into equity at that date, whatever is the equity prices.
that
So
is the
initial 5 year, it is an instrument.
correct.
But after 5 years, it will get changed. So it has embedded terms and condition, which is resulting into change from a normal agreement, normal loan agreement to a derivative instrument.
Okay.
Embedded derivatives are implicit and explicit terms that affect some or all of the cash flow or the value of other exchange required in a contract in a manner similar to a derivative instrument. An embedded derivative must be bifurcated. So you need to bifurcate how much is the loan amount in it and how much we are paying for the conversion. So generally, when you take the loan, which is convertible debenture, you'll get lower interest rate. For example, market interest rate is 10%. You'll be getting at 6% interest, which is convertible. No, I'm sure like most of you might be watching Shark Tank these days, right?
Yes.
You'll see like 12% convertible loan kind of things, right? So market rate is like 18%. They are giving at 10%, 12%. So there are certain value attached to it. So that you need to bifurcate. Accordingly, you identify what is the finance cost and what is the benefit that company is getting.
Okay.
Last one is hybrid financial instrument, convertible preference share, debenture, warrant, bifurcate the liability and equity. Instruments that do not qualify for hedge accounting need to be bifurcated separately and do the accounting treatment accordingly. Derivative instrument need to identify what is swap, option, future, forward contract in that and do the treatment accordingly. Measurement of the fair value for the respective instrument. And last one is recognize the gain and loss on derivative instrument in income statement that does not qualify for hedge. If there is any derivative and you are not doing hedging of that, so any gain and loss on that need to be recognized in income statement directly. If the instrument is hedge, then accounting treatment or recognition will be according to cash flow hedge, fair value hedge, or foreign currency exposure, as the case may be. Right. Last question of the day under FASB ASU 2016-1 financial instrument overall subtopic of ASC 825 recognition and measurement of financial assets and liability. Which statement is correct? Disclosure about bifurcated embedded derivative would be optional. The answer is no, it is mandatory.
Yes.
Right?
Yes.
Second is non-public business entity would be required to disclose fair value of all financial assets and liability measured at amortized cost for non-public business entity. So it is not mandatory. So there are certain relaxation to it. Third is entity would no longer have to disclose in notes to the financial statement all financial assets and liability grouped by measurement category and form of financial assets. No, it has to be go by category, which is like the disclosure category, not the measurement category. Right? For example, if you are measuring account receivable or maybe your shares, debenture, or investments into the same bucket as a fair value hedge, then do you need to disclose everything as a fair value hedge, or you should be disclosing account receivable, fair value hedge, you can say investment at fair value hedge. So you will be disclosing by line item, not by fair value. Fourth is entity would measure equity security with readily determinable fair value at their fair value with the change in that value record as a part of net income. So any change in the fair value will go to the net income. Hence the fourth option is correct.
Okay.
Right? Any doubt?
Yes, sir.
Ayush?
No sir.
No,
मेरे
sir.
एक दो सर छोटे से ऑडिट के डाउट थे, बहुत छोटा सा कंफ्यूजन था, वो पूछ
बोलो
लेता
ना।
हूँ सर। एक जो मेरे को कंफ्यूजन रहता है हमेशा, एक जो हमारा कंपाइलेशन ऑफ फाइनेंशियल स्टेटमेंट होता है और एक होता है प्रिपरेशन ऑफ फाइनेंशियल स्टेटमेंट, इन दोनों में सर क्या फर्क है? मतलब मैं ये समझ ही नहीं पाया।
हाँ, so preparation of financial statement when you are doing, it's not required you to be an independent. That means you are part of the management. It's not mandatory for you to be an independent. Preparation of financial statement, that means you are preparing the financial statement from trial balance and all the schedules.
And I am a part of management.
You are part of
डेटा
management.
कलेक्ट करके एक एक आइटम को डालना है कहाँ, वो सब
Yeah, as an accountant.
Okay.
If I very simplify. Compilation means the management has given you the respective schedule and you are reviewing it, compiling it, and issuing the compilation report that it is being compiled according to the respective gap.
Okay, मतलब financials prepare कर दिए हैं management इस केस में, and we are just compiling it कि सही है, नहीं है, गलत है, जो भी है.
As per gap है या नहीं.
अच्छा. Okay.
That is a compilation. So for compilation, you are issuing compilation report. For preparation, you are not issuing any report.
Okay. Okay. Done, sir.
Cool. Okay. So enjoy the rest of your Sunday. Please do the practice. I'll send you the notes right away. So yesterday class notes I have already sent in the group. So go through the notes and do the revision.
Sure, sir.
Okay. Thank you.